Alright, I believe that finally my computer decided to start working today. Hello everyone. Today we are here to discuss the UK Services PMI, which will be out in about 8 minutes already from now. And as you can see here, I am here for you to cover the fundamentals, and also Michael will join as soon as possible and turn on his camera to cover the technicals, of course. So let's take a look at the forecast. So as you can see, at the current moment, the forecast stands at 55.1 points, while the prior figure was at 55.6. And here also you can see the graph. And talking about it, I would like to mention that UK's dominant services sector has started 2016 in a slightly more robust shape than expected, according to a closely watched survey of activity. The Purchasing Managers Index produced by research group Markets edged up 55.6 in January from 55.5 in December, and economists had been expecting a dip in the reading to 55.4. However, markets said that growth in January was supported by new businesses, but warned that the news was not all positive. The survey indicated the weakest 12-month outlook in 3 years as businesses worry about a hard landing in China, the possibility of the UK leaving the European Union, and higher interest rates in the United States, of course. But right now, economists are forecasting a reading of 55.1, just below the last month 55.6, and the data this month has been poor, and there is also an elevated chance to see a disappointment in the reading. But we will see what will happen. But right now we have to look at the economists' views. Here you can see different experts giving their estimates on the matter on the date release. So according to their views, we have the survey summary created by Bloomberg. So the median estimates in it stands at 55.1, average 55.09. Highest estimate was 56.0, and the lowest estimate is 54.0, and the total number of estimates has reached 26 this time. Turning to Dukascopy community member sentiments on the cable, right? Yes, we see that traders at Dukascopy are a little bit more bearish, 54.74% bearish votes, and on the bull side there is only 45.26% of all Dukascopy traders. And of course you can take a look at a couple of comments, but I'm not going to read them out because it's high time I have passed the floor to Michael, who is going to cover the technicals for you guys, as I said before. So Michael, please go ahead.
Thank you, Kate. Hello, everyone. So for today's data release, we have the cable currency pair, as usually for the UK data. So we have the negative supply trading strategy today, expecting the data to disappoint us slightly. And of course, we have the sell market. We're selling the sterling and buying the dollar. The market sentiment for the given pair is quite close to the neutral, but still on the bullish side, with 51.40% of traders holding long positions. And the sterling is being sold overall in 47.97% of all cases, and the US dollar being bought in 54.87% of all cases. Moving to the pending orders, you can see that they are quite close, quite similar. In the 50-pip range, it's 54.55%, to purchase the British pound, and in the 100 pip range it's 54.29% also to purchase the British pound. Other market participants are mostly also bullish on the sterling dollar. Rwanda has a bullish sentiment of 57.03%. The FX is also quite similar, 58%. But the Saxo group has a neutral sentiment with bears slightly outnumbering the bulls. Their sentiment is 50.58%. So moving to the market reaction table, where we have the reactions for the previous 5 UK services PMI releases. The largest reaction was 28 pips. As you can see, the reactions were getting smaller and smaller, with the latest one being 13 pips 1 month ago. So we might even have a smaller reaction today, especially if the data falls in line with expectations. But nonetheless, the average reaction we can expect today is exactly 20 pips. So based on this reaction, we can set the take profit and stop loss levels accordingly, with the take profit level located at 1.4073, right on top of the 4-hour S1, and maybe some of the 20-period simple moving average close by, and there's the 200 one on the upside, so somewhat bolstering this resistance. In case the data is actually better and we do see a reaction to the upside, and we could still have a positive reaction even if the data disappoints, same as it was yesterday, because there were no more clues about the Brexit, no further concerns about it, so the sterling could still outperform the US dollar. And the stop loss level is located at 1.4033, which is somewhat on top of the daily pivot point, so bolstering this support area, but I reckon we'll have to move the take profit and stop loss levels slightly to the upside, since we are seeing the pair moving towards the upside at the moment. Quickly, the technical indicators, which are giving us bullish signals only in the 4-hour time frame and bearish in the longer ones. But as usual, the most important one is the 30-minute time frame indicator, because it was updated specifically for the given date released 30 minutes ago, and unfortunately it's giving us mixed signals, so unable to tell what will happen with the pair exactly. And I guess it's time to slightly adjust the take profit and stop loss level. The take profit somewhat towards 84, and the stop loss level towards 44, so closer to the Bollinger Band. We should have the data in about 20 seconds. I'll just mention the forecasts of the Bloomberg survey of some banks, such as BNP Paribas. They expect the data to be slightly worse, 55 points exactly, down from the forecast of 55.1. The Royal Bank of Scotland also expects a 55 reading, while Commerzbank expects 54.8. So the data to disappoint. And we have ADP employment change instead of the UK services PMI, but I'm guessing that's the data. It's a lot worse than anticipated, 52.7, and hence we see a reaction to the downside, but not as strong as we hoped for. 14 pips reaction to the downside, but the stop loss level, oh my god, I am so sorry, no one actually said that I had a mistake with the take profit and stop loss levels, since we expected the data to disappoint initially, as the take profit should have been on the downside. And yeah, we almost seen it reached. No, actually it is reached right now. And yeah, so I guess that's all from my side, and back to you, Kate.
Thank you, Michael. Well, here is a slight misunderstanding, I guess, because what was the number, Michael? Could you type it in the chat? Yeah, okay, 52.7, right. So yes, you can still see the reaction widgets to the downside, and of course the data is worse than anticipated anyway. So today that would be it from our side. We don't have our webinar today because it's Thursday, but tomorrow we're going to have both a data release and Dukascopy Research webinar at 12 GMT. So right now we have to say bye to you, but even though we don't have any webinars by the research team anymore today, we have a number of webinars by our community members, so definitely make sure you tune in and stay here for the discussion. So thanks once again, and see you later. Bye.